closely, if it's sustained, then I think it's highly investable. If it doesn't back off and keeps going, then that will greatly increase my sense of urgency to add more silver to my portfolio.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for June 16th through June 23rd, 2025, while supplies last. First this week, we feature backdated quarter-ounce gold American Eagles at just $75 over melt per coin. Next, backdated 1-ounce silver maples are only $3.09 over spot. 90% mixed junk constitutional silver is just 99 cents over spot. And finally, backdated 1-ounce platinum platypus coins are just $1.19 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is the independent speculator, Lobo Tiggre. Lobo, thank you so much for joining us today.
Always good to talk with you, Elijah.
Well, it's great to have you today. I did want to discuss the movement first in precious metals, especially silver. Your take on silver really breaking out of this $35 level, potentially. Are we going to stay here? What's your view?
Honest answer is don't know. It is significant. This breakout has me paying much closer attention, has me checking my list twice of potential silver stocks to consider buying. This is meaningful. But that said, it's not just a silver thing. If you look at the charts, if you look at the facts, right, we see that platinum, palladium, even rhodium all moved at the same time for silver's first big move up to 37. And then they all retreated at the same time. So I don't really know what's going on there because the use cases, the industrial side for these industrial metals is not the same. The others don't go into solar panels, but it seems that it's the industrial side. It's been particularly interesting to see silver and gold moving in opposite directions in recent days. Not always. I mean, overall, they're up together, of course. But while this breakout's been happening in silver, we've seen silver and gold moving in opposite directions sometimes. So it's not just the safe haven bid, or perhaps not at all. Something else is going on. There are theories about a silver squeeze, shorts being covered and so on. But that doesn't explain the other silvery industrial metals that are moving at the same time. Hence my honest answer. I don't know, but I'm watching it closely. If it's sustained, then I think it's highly investable. If it doesn't back off and keeps going, then that will greatly increase my sense of urgency to add more silver to my portfolio.
Now, you mentioned platinum there. It's really surprised me in some respect. We're seeing, 25% up in a month. If we look back at the beginning of the year, it's a 40%, almost 40% up from where we started. I mean, a lot of people, including myself, were hoping for moves in platinum, but I think this may have kind of caught a lot of us by surprise here. Your take on platinum's rise?
Well, it's really interesting because everybody say, oh, well, platinum's cheaper than gold. It's rarer than gold. It shouldn't be. It's got to go up. And hey, look, it's happening, right? Maybe this is the year that's sustained. We'll see. But again, it's not just platinum. And, so there's more going on than just that. And it's really interesting to me that it's not just the automotive metals, platinum, palladium, rhodium, it's also silver, which has a very different characteristic usually. So it's really interesting what's going on. But the thing though is like the argument that, oh, it's got to go up because it's too cheap, it's oversold. You could have made that argument anytime over the last 10 or 15 years, and you would have been wrong almost every year, except this year. Now, maybe this is it. Maybe platinum's breakout is even bigger news than silver's, and this is the year for long suffering platinum bulls to finally get their payday. I won't say no to that. I don't know. But I don't see it in the fundamentals. And for all industrial metals, copper included, which is another of my favorites, as you know, we're not done with Trump shock. Never mind the war. That's a complete question mark. The latest heating up of the wars that we have. Those are giant question marks that nobody can trend or chart a trend on. As far as what we see happening in the economy, there's a lot of, I think, excessive optimism on Wall Street that the worst of Trump shock is behind us. Those crazy 145% tariffs, that's gone. It's not so bad. But that's all part of the art of the deal. So whatever was announced, maybe the peak scariness of announcements is behind us, but the actual reality of the impact of these tariffs is still in front of us. And as that impact percolates through the real economy, then we get to see what Trump shock really is. And when I say Trump shock, by the way, I'm not necessarily throwing Trump under the bus. If he's trying to revitalize not just American industry, but his emphasis seems to be military adjacent, as Doomberg likes to say. I give credit to Doomberg for that phrase. That's really significant. Trump is trying to do something much bigger than just tariff fairness here. So, even if one agrees with that, though, it doesn't make it any less shocking to the economy to completely retool it in a different basis than it has been for decades. So, not to beat that to death, all I'm saying is I think it's naively optimistic to think that the worst economic shock is behind us. And therefore, it will pay to be cautious about piling into industrial metals. Come the day, the tariff deals are done and we have the new normal established and we see what happens, and probably an inflationary environment, maybe I will add platinum to my list. That will be the first time in many years that I would have done that. But if that happens and the breakout is sustained, then yeah, that becomes investable. Somewhat similar to silver, though silver, of course, also has its monetary safe haven side. So perhaps dancing in between the two.
It does seem like there may be a response to inflation here, or potential inflation in the future. I mean, even Powell just the other day was mentioning how a lot of people are acknowledging that there's going to be a meaningful increase of inflation coming soon. Your take on his comments there, and do you think that's a potential reason why metals across the board are reacting here?
It's interesting that gold is off. As we record, at least, gold is off on inflation news and scary news out of the Middle East. So, for your inflation hedges, that gives you one pause. Bigger picture, I'm not worried about gold in that response at all. The inflation thing, there's so much we could talk a whole hour about Powell and more. He's even in his understated, even humorous way of speaking, he radiates calm and reassurance, which is his job. But he really did drop some bombshells, and basically the Fed's updated outlook is for higher inflation and weaker economic growth. That's stagflation. And we all know what did well the last time we had a big bout of stagflation, right? The other thing was really striking to me is, when they were discussing the dot plot and people were asking, like, this makes no sense. If you're being data dependent, if you don't know what's going, then, how do you make these projections? And he has said this before, but he really stressed this time he said, none of us have any confidence in those dots, but, we had to give an answer. So those are the answers we gave. Then he looks at the reporter and says, what would you say? What dot would you put? I remember exactly the word, but it's like, what would you do? I was blown away. The chairman of the Federal Reserve just asked the reporter for advice on where to put the dots on the dot plot, right? I mean, not really, but it was a striking admission of, we really don't know what we're doing. We're radiating calm. We say we have everything under control, but we really don't know, which is the message. We're in wait and see mode. That means we don't know what we're doing. And actually, in a way, that makes perfect sense, because they have no tool for stagflation. If your tool for inflation is increasing interest rates to strangle the economy, but your tool for reviving the economy is to raise interest rates to, get the economy breathing again, you can't do both at once. So, in a way, I think, Powell kind of let the cat out of the bag there. It'll be really interesting to see how this plays out.
Yeah, I mean, I think a stagflationary environment is obviously good for gold. But as you mentioned, platinum has mainly an industrial component to it, and also silver has an industrial component to it alongside with its monetary component. So what has to occur for you to be very bullish on both silver and platinum here?
Well, probably not entirely the same. I would look at them at the specifics for their markets. And the way I see it, people get mad at me when I caution about the potential headwinds from the industrial sides of these metals, or really silver. And platinum is an industrial metal, I think, through and through. It's not a monetary metal. I mean, no, I'm not going to go down that rabbit hole. Just leave that statement stand where it is. So, but on the other side of the kerfuffle, once the Trump shock settles down and the new normal, whatever that is, emerges, then silver gets the extra tailwind of the industrial demand that will be there. I mean, the solar panels aren't going away, and silver is used in all kinds of other electronics. It's also used in medical. It's used in so many things. So, as the big, beautiful bill and all those trillions of dollars go into the economy, and as the rest of the world, whatever the U.S. does, as the rest of the world doubles down on the green agenda, I think the demand for silver really goes up. Now we have to see how quickly other industrial metals ramp up production, because as you know, and probably the audience recalls, silver is largely a byproduct. Even your purest silver mine is really a lead or a zinc or a lead zinc mine with a huge silver credit. And most silver doesn't come from those kinds of things. It comes from these giant copper porphyries that have a bit of silver, but they're so big that they produce these enormous amounts of silver. So it is a little complicated, but I am bullish on copper and I am bullish on gold. And silver is financially, at least, sort of an alloy of the two. And so it makes perfect sense to me to be bullish on silver. What I'm saying is, you can get mad at me if you want for saying there's potential headwinds in the near term for silver and other industrial metals, including copper and platinum. But on the other side of the kerfuffle, then they get this industrial tailwind that gold doesn't get. And in fact, if things calm down, safe haven demand diminishing would be bad for gold, but would be even better for the industrial metals. So I really like silver a lot. Come the day, at the right time, and I don't. And by the way, speaking of time, I don't claim to be able to time this. I will not be able to say, this is the bottom of the market and be right. But I will be looking to be reasonably confident that time is behind us. And I see value there, and it looks like, we're on the right trajectory here. Then that's when I'll be buying.
Now, when it comes to the miners, we've seen a huge increase this year in the miners, and your perspective on that and the meaning of the miners move this year.
So there's mixed news. It's often said that the miners lead the metals, but we really are in uncharted waters. I mean, the whole COVID lockdown and the response to that, and the money helicopters staying in the air. We've had $1 trillion plus deficits for years running now, and we're looking at increasing that in the U.S. And Europe wants to spend $1 trillion rearming. The money helicopters are there. China continues stimulating. So it's easy to see that the mining stocks could be leading, but in this world where everything has changed, I'm very skittish about putting too much weight on what's worked in the past. That said, it is very encouraging to see the mining stocks start to deliver. I think you and I even had a conversation about a year ago where people were saying, these stocks are, they don't move, they don't work anymore. Gold stocks are broken. Why do we even bother with these stocks? They don't, gold goes up and they don't do anything. And at the time, that was actually a fairly rational response. I mean, why would you take the risk of owning a mining company that can have profitability problems or nationalization issues? The legendary endangered mosquito gets discovered at the key property, right? Whatever it is. Why would you bother doing that if they're not going to give you any more capital gains than just buying the metal itself? Fair question. So the good news is that's no longer the case. The stocks are starting to do what we said they would do, and the leverage is back, the mojo is back, but it's taking its time to trickle down the food chain. And this is maybe the best takeaway, is that there are still not so much in the majors, or not so much in the market darlings, the high profile, best, most successful companies out there. But there are companies that have added value in the ground, have made material discoveries or expanded deposits that are big enough to matter or that look economic. Farther down the food chain in the juniors, there are stocks out there that are up with gold a bit. They are responding, but they're not, looking at 52-week highs or all-time highs as some of the more high-flying ones are. So I'm saying there's opportunities still here. The caveat is not everything on sale deserves to be bought. If you've got a gold stock that just can't get up off the floor, that $3,500 gold did nothing for this stock, didn't move at all, that's a clear red flag. The market is offering you a litmus test. You need to ask yourself whether I really want to own this stock or not. But in between the ones that are overbought and the ones that are DOA, there are opportunities that are responding to higher gold, which is good, but still offer a compelling value proposition, which is great.
Now, I know when we had you on at the beginning of the year, and I think actually earlier or late last year, you were talking about copper being your number one conviction trade of the year. We are seeing about a 20% increase this year to date in copper. What is your outlook? Because I know you were always also cautious of a recession and economic downturn with respect to copper.
Yeah, and I got pushback on that. People were saying, Lobo, gee, if copper is your number one highest conviction trade for the year, why aren't you buying it? Why are you being so hesitant? And then copper went to an all-time high, at least nominally, earlier this year. Oh, Lobo, you missed it. See, you were too hesitant, and then it corrected, right? So, I'm a fundamentalist, and the things that we were just talking about with the economy, with Trump shock, with the part of Trump shock, never mind the shock and awe of Trump being Trump on TV, but the actual reality of the changes working their way through the economy with that in front of us, there's obvious headwinds while we work through that for industrial metal like copper. So I just wasn't ready to go there. I think the volatility we've seen in copper since it spiked earlier this year, I think supports my view. And it's not all clear yet. So I'm just not ready to go there. But I do think that as soon as that does clear up, that we're going to see much, much higher copper prices. Because unlike other things, silver, I like silver. I'm bullish on silver, but it's the byproduct. And the silver miners as such don't control their destiny as clearly as one would hope for. And, other essential industrial inputs like oil. Well, oil is in a glut right now. You've got OPEC not just increasing production, but, they quadrupled the rate of increase of their production despite lower prices. And Trump still wants drill, baby, drill, So there are multiple choices out there for things that could benefit from this economic inflationary environment that I think we're going into. And this, this reindustrialization is going to need a lot of raw materials, all good. But copper's the one that's really, and uranium, we haven't gotten there yet, but the copper's the one that's facing structural supply constraints. The copper just isn't there. The mines that need to be built are not being built yet. And the discoveries that need to be made to fill the pipeline behind that, they're few and far between. At least one's big enough to matter. So this is the basis of my pick on copper. Is this the one that faces the greatest structural supply constraint? Not enough copper there. And at the time that I made that call, it was the one that was more on sale. Uranium also faces, I think, a really substantial and intractable supply issue going forward. But at the time I made that call, uranium was much in much better shape. So I picked copper as my top pick. But you know what? I'm long both. I'm also long silver, dear silver bulls, and gold. So, whichever one works out the best this year, I'm positioned to benefit. And so are my clients, by the way.
And how about uranium? Your take on that right now?
The quick take on that would be it clearly carved out a bottom in recent months. And I'm very glad that is, I don't claim to be able to time market bottoms, but I put out a pretty clear signal around that time. And I said, put out a new shopping list full of uranium stocks. And I told even free readers on a free weekly digest that, hey, I think it's time to start buying uranium stocks again. And that has worked out really well for anybody who listened. I do think it's sustainable. I don't think it's a head fake here. It's, it's wiggling. Nothing goes in straight lines. But again, these structural supply constraints are there. The low-hanging fruit of high prices curing high prices, that's being picked, and it's not enough. And most of it is late, over budget, behind schedule. So the fear that there might have been a near-term supply rush to meet the gap in uranium, I think that was overdone. You and I have talked about a potential megatons to megawatts scare. That's off the table right now. Even Trump just hasn't mentioned it, I think, for a month or two. It's just not on the agenda anymore, if it ever was. So it looks very good. And remember the market carving out the bottom, that's the spot price. The long-term contract price, it never rolled over. So the spot price is actually coming back up to the long-term contract price, which is the real price, if you will. I think that's very, very solid. And then for the soft data side, I mean, it seems every day we get some new really bullish announcement for uranium. Just yesterday, as you and I speak, the Chinese announced that they plan to double their reactor fleet, not just eventually or someday, but by 2040, which is, for industrial manufacturing, industrial installations of that magnitude and scale, that's pretty fast. That's a lot of reactors very soon. And we've got the Japanese, they're not just restarting their reactors, they announced an approval to extend mine life beyond 60 years for the plants that are shown to be safe. This is huge in the place where Fukushima happened, right? That last big, scariest accident. And we've got the Czech Republic just contracted for a couple new reactors. Ukraine wants to build new reactors. Even Germany has, of all places, you have to ask yourself if hell froze over, because Germany pulled an about face on nuclear energy just recently as well. So the sales are full of wins. It's just totally, pushing this good ship uranium in the right direction. Maybe someday thorium will take over or fusion, but that's not an investment concern for right now.
I did want to, before we let you go, really get your, broad overview of, there's so much uncertainty, right, in the market, as you've mentioned. Things could go either way for a lot of the metals, and
especially the wars.
Right. Yeah, exactly. So when it comes to the wars and all these uncertainties out there, how do you navigate that? I mean, is it really, paying attention day to day what is occurring and how to invest and stuff? But what is your strategy in that regard?
Well, I don't claim to have a strategy that will make everybody rich as a result of anything that could happen. I don't have a foolproof strategy, but what I am doing is, as you say, paying very careful attention on a daily basis. This is not a time for passive investing. The range of outcomes in what's happening between Israel and Iran right now is so huge, with massive impacts for the whole world. It's just not a time to buy anything and forget about it in terms of investments and speculation and that sort of thing. So paying careful attention, as you say, I think is de rigueur. Also, don't forget that bullion itself, gold and silver, sorry for me, not platinum, but gold and silver bullion that I can hold in my hand, that's not a speculation on higher prices in my view. It's not even an investment. It's savings. It is a physical asset that, like Doug Casey likes to tell us, it's your financial asset that you can be long, for which there's no short. There's no counterparty risk. It's value, physical, that I can hold in my hand in case of the worst coming to worst. And I hope that doesn't happen. But if anybody, and probably in your audience it's not a concern, Elijah, but if anybody doesn't think they've got enough stacked away, you really want to address that at times like this. And if you go out and buy gold at 3,300 or 3,400, wherever we are, and it goes down under 3,000 next month or something because of some fluctuation, don't get mad at me and say, hey, Lobo, you told me to buy gold at the top. I'm not saying to invest in gold because it's going up. I'm saying if something really bad happens, you want to have that gold regardless of the gold-dollar exchange rate or whatever other currency exchange rate there is. So I think both of those are no-brainers. Paying very careful attention, remembering that that bullion is savings, it's insurance, it's not a speculation. And then the other takeaway or perhaps useful thing I can say is that the war news tends to move markets in the very short term, and especially gold. But that tends to fade, and then the market goes back to whatever trend it was on before. So don't throw all the trends and your observations of the economy out the window. That still matters. Yes, the wars can change them dramatically, but hopefully, we won't go nuclear in the Middle East either way, or hopefully things will simmer down, and then those investable trends will continue, and you'll be glad to have those on your radar.
Well, Lobo, we really appreciate your time today. If our viewers are interested in learning more, they can find your website right there, independentspeculator.com. Tell us a little bit about your work.
Well, I'm mainly a due diligence guy. People ask me for macro comments like this about the war or whatever, but I'm not a military expert. Most of my work, what people actually pay me for, is independent evaluations of mining stocks and other resource companies. So you can check out my thinking and the way I work by the free newsletter. We have a free digest that goes out every Saturday. And then if you think you could use some help with due diligence on your stock picking and rock kicking, then consider my paid subscriptions.
Fantastic. Any last thoughts before I let you go, Lobo?
Yeah, this situation in the Middle East, this is a big deal. This, Straits of Hormuz alone, let alone what could happen there. I mean, I'm sorry to say, it looks like the U.S. will be drawn in. That's not a forward-looking statement, but Trump is clearly hoping the Iranians will back down. And Iranian media, state media, just posted it on X last night, a picture of a hand lovingly caressing a nuclear warhead. I don't think they're backing down. So I'm not making a prediction here. I'm just saying the situation is fraught and it really deserves careful attention. Please pay attention, be prepared to act nimbly.
All right, Lobo, really appreciate your time today. As always, thank you so much and God bless.
You too, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for June 16th through June 23rd, 2025, while supplies last. First this week, we feature backdated quarter-ounce gold American Eagles at just $75 over melt per coin. Next, backdated 1-ounce silver maples are only $3.09 over spot. 90% mixed junk constitutional silver is just 99 cents over spot. And finally, backdated 1-ounce platinum platypus coins are just $1.19 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.